The Klinger oscillator is calculated using a complex formula that measures volume force. Let's break down this calculation process into four key steps. First, we calculate the volume force, or VF. This measures the power behind price movements. Volume force considers three components: the trading volume, a sign based on price direction, and a trend direction multiplier. The trend direction is calculated using a formula that compares daily price movement to cumulative movement over time. Next, we calculate two exponential moving averages of the volume force. A typical setting uses a 34-period EMA for the faster line and a 55-period EMA for the slower line. The Klinger oscillator value is calculated by subtracting the slow EMA from the fast EMA. This creates a line that oscillates above and below zero, indicating volume force momentum. Finally, a signal line is created by calculating a 13-period EMA of the Klinger oscillator itself. The signal line follows the oscillator and is used to generate trading signals through crossovers. To summarize, the Klinger oscillator is calculated through a series of steps that transform volume data into a powerful momentum indicator. These calculations help traders identify the force behind price movements and potential reversal points in the market. Signal line crossovers are one of the primary trading signals from the Klinger oscillator. These occur when the oscillator line crosses above or below its signal line. The Klinger oscillator, shown in green, is more responsive to price and volume changes. The signal line, shown in gold, is a smoothed version of the oscillator, making crossovers significant events. A bullish signal occurs when the Klinger oscillator crosses above its signal line. This suggests potential upward price movement as volume flow is becoming more positive. Conversely, a bearish signal happens when the oscillator crosses below its signal line. This indicates potential downward price movement as volume flow is becoming more negative. The Klinger oscillator typically produces multiple crossover signals as it fluctuates above and below the signal line. These crossovers are most reliable when they occur in the direction of the overall trend. When a bullish crossover occurs above the zero line or a bearish crossover below the zero line, the signal strength is increased. The zero line in the Klinger oscillator marks the boundary between buying and selling pressure. Let's examine how crossing this zero line provides meaningful trading signals. When the Klinger oscillator crosses from negative to positive territory, it suggests a shift from selling to buying pressure. This bullish zero-line crossover potentially indicates the start of an uptrend. Notice how the price begins to rise after the crossover. Conversely, when the oscillator crosses from positive to negative territory, it indicates a shift from buying to selling pressure. This bearish zero-line crossover potentially signals the beginning of a downtrend. The price often begins to fall after this crossover. Zero-line crossovers often represent more significant trend changes than signal-line crossovers. This chart illustrates the relative strength of the two types of crossovers. Zero-line crossovers typically indicate larger market shifts and more reliable trading opportunities. Divergence patterns are powerful signals that occur when price movement and the Klinger oscillator move in opposite directions. In bullish divergence, the price makes lower lows, while the Klinger oscillator makes higher lows. This creates a bullish divergence pattern. Notice how the price makes lower lows, while the oscillator shows higher lows, indicating weakening downward momentum. This bullish divergence suggests that the downward momentum is weakening and a potential upward trend reversal may occur. In bearish divergence, the price makes higher highs, while the Klinger oscillator makes lower highs. This creates a bearish divergence pattern. Note how the price makes higher highs, but the oscillator fails to confirm with lower highs, indicating weakening upward momentum. This bearish divergence suggests that the upward momentum is weakening and a potential downward trend reversal may occur. Divergences are most powerful signals when they occur at price extremes or after extended trends. Their effectiveness increases when confirmed by other technical indicators, when multiple divergences appear in succession, or when combined with important support and resistance levels. The Klinger oscillator offers several unique advantages when compared to other popular volume indicators like on-balance volume and volume price trend. Let's examine how these three volume indicators differ in their visual representation and capabilities. Let's compare these indicators across several important dimensions, including time sensitivity, formula complexity, and signal quality. The Klinger oscillator stands out for several key reasons. It incorporates trend direction directly in its formula, making it more responsive to changes in market sentiment. Unlike simpler volume indicators, the Klinger oscillator uses exponential moving averages to smooth the data. This approach offers several significant benefits. This comparison demonstrates how the Klinger oscillator, green, responds more quickly to market changes compared to simpler volume indicators, red. By combining volume with price action and using sophisticated smoothing techniques, the Klinger oscillator offers enhanced sensitivity to money flow while simultaneously reducing false signals. Now let's explore the optimal settings and customization options for the Klinger oscillator. The Klinger oscillator comes with default settings of 34 and 55 periods for the fast and slow EMAs respectively, and a 13-period signal line. These settings can be adjusted based on your trading style and time frame. Shorter periods create a more responsive oscillator that's suitable for short-term trading but may generate more false signals. Longer periods create a smoother oscillator that's better for identifying major trends, but may be slower to respond to price changes. Different trading styles benefit from different Klinger oscillator settings. Scalpers and day traders often prefer shorter periods for quicker signals, while swing and position traders prefer longer periods for more reliable trend identification. Beyond adjusting the period lengths, traders also create custom variations of the Klinger oscillator by modifying the volume calculation method or adding additional moving averages. When customizing your settings, it's important to understand the trade-offs. Shorter periods provide more signals and faster responses, but at the cost of more false signals. Longer periods reduce false signals, but may delay entry and exit points. When customizing your Klinger oscillator, always test your settings on historical data first. Adjust for different market conditions, and consider combining with complementary indicators for confirmation. Finding the optimal settings for your trading style may require experimentation, but the flexibility of the Klinger oscillator makes it adaptable to various market conditions and trading objectives. The Klinger oscillator is most effective when combined with other technical analysis tools. Used alone, the Klinger oscillator provides volume-based insights, but lacks price confirmation. Price-based indicators like moving averages and trend lines can confirm the directions suggested by the Klinger oscillator. When both price action and Klinger give the same signal, the trading opportunity is stronger. Momentum indicators like RSI or MACD can help validate potential reversals signaled by Klinger divergences. Watch for divergences between momentum indicators and the Klinger oscillator, as they often signal important market turning points. Support and resistance levels provide context for entry and exit points based on Klinger signals. When Klinger signals align with key support or resistance levels, more reliable trading opportunities emerge. Using the Klinger oscillator as part of a comprehensive trading system, rather than in isolation, significantly improves its effectiveness. By combining trend analysis, momentum indicators, and support and resistance levels with the Klinger oscillator, traders can create a robust technical analysis framework. In this section, we'll explore practical trading strategies using the Klinger oscillator. We'll examine 5 effective strategies that traders can implement immediately. Our first strategy focuses on trading signal line crossovers that occur in the direction of the overall trend. Here we see an uptrend in price action. The Klinger oscillator consists of 2 lines, the faster Klinger line and the slower signal line. When the Klinger line crosses above the signal line during an uptrend, it generates a bullish signal that aligns with the trend direction. Notice how subsequent crossovers in the same direction provide additional entry opportunities as the trend continues. The key is to only take trades in the direction of the overall trend, which significantly improves your probability of success. Our second strategy involves entering positions after the oscillator crosses the zero line, but only with price action confirmation. Here we see price falling to a support level. Notice how the Klinger oscillator moves from negative to positive territory. When the oscillator crosses above the zero line, it indicates a potential shift in momentum. However, we don't enter immediately. We wait for price to show confirmation by bouncing off support and beginning to move upward. This patience improves your entry timing and reduces the risk of false signals. Our third strategy focuses on identifying divergence patterns at market extremes, which can anticipate trend reversals. Here we see price making higher highs as it continues its uptrend. However, the Klinger oscillator is showing lower highs, creating a bearish divergence pattern. This divergence warns that momentum is weakening even as price continues higher, signaling a potential reversal. When trading divergences, look for them at market extremes where the probability of reversal is highest. Our final two strategies are equally important. Let's look at how to confirm breakouts and analyze oscillator slope. Strategy 4 uses the Klinger oscillator to confirm price breakouts from chart patterns. When price breaks out, look for the oscillator to also break its own pattern, confirming the move's legitimacy. Strategy 5 focuses on analyzing the slope of the oscillator to gauge trend strength. A steep slope indicates a strong trend with momentum, while a flattening slope warns of weakening momentum and potential reversal. While these strategies can be powerful, proper risk management is essential for trading success. Remember that no indicator works 100% of the time. Always protect your capital with proper position sizing and stop losses.